Thank you for tuning in and welcome back to Real Estate Facts. In today's episode, you'll learn about no down payment home loans and low down payment options. My name is Andrew Finney. Please consider me your real estate geek. I am always here to help. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. This video is going to have a lot of powerful information and with questions that you're going to want to ask your local loan officer. So please watch this video start to finish to get the most out of it. It is important to note on that matter, I am a professional real estate agent, a trusted real estate advisor, and not a loan officer. For any questions to see how any of these loan products affect you, please contact your local loan officer. With that disclaimer out of the way, let's go ahead and get into these no down payment home loan options and low down payment options that you'll want to know about when you get ready to buy your next home. The first one that you want to consider is a USDA loan. A USDA loan was created by the U.S. Department of Agriculture for a housing program specifically with rural development to spur rural development. The USDA Rural Development Loan is a zero down mortgage for low to moderate income families. And it has a lot of benefits, including a lower mortgage insurance premium as well. I'm going to put a link in the show more descriptions below so you can check the USDA eligibility map and see if the area that you would like to buy a home in would qualify for that loan program. Very, very, very important to note that since it is for rural areas of the country, it encompasses most of the landmass of the country. If you're in one of those locations where you look out and you don't see a whole bunch of homes all around you, you might be able to qualify. Check that USDA eligibility map, check with that local loan officer, and figure out if a USDA loan is right for you. The second one, now this is obviously my favorite because as a retired Marine, former United States Marine combat veteran here, I love the VA loan product. There's a lot of reasons to love the VA loan program. One of them is because it's a zero down loan. Now the trick to this is you must be active duty or a veteran that qualifies for this loan program. A lot of veterans, as long as they got an honorable discharge, will qualify for this loan program. If they aren't aware of that, they should be, because this is a really, really big game changer into home ownership. It is important to note there are a few things about VA loans that people should know about. Even though it's a zero down, there is a VA funding fee. The VA funding fee can change from year to year. Right now, I believe it's somewhere around 2.15, 2.25% of the total loan value. That's because the program has to maintain its self-sufficiency, and even though it's not a down payment, it's something that the VA uses to continue with being able to facilitate the program. If a veteran has a disability rating greater than 10%, that service-connected disability rating, then they won't have the VA funding fee, or they'll have a reduced amount. Now, to know more about that, you want to contact your local loan officer familiar with VA loans. Then third option that you want to consider are FHA loans. Now we start going into low down payment home loans. The first two were no down, which is a USDA loan and a VA loan. So now the third option here is an FHA loan with a low down payment. How you might be wondering is generally a FHA loan is a 3.5% down payment loan. It's important to note that you can get some of these FHA loan programs with even a lower credit score. Lower credit scores are going to range and vary between lender to lender. The more risk associated with providing you the loan, the higher the interest rate is probably going to be on the backside of that, just as you know. FHA also permits that you can use gift funds for the down payment, so that makes it a zero down loan. Now you might be wondering, what is a gift fund? A gift fund is like if you were crowdsourcing your down payment, if you had a family member that gave you the money for your down payment, or if you had a friend that gave you the money for down payment. With the gift letter, you can actually use those funds towards your down payment. But with that gift letter, whomever is giving that money has to agree they have given you that money for the sole purpose of purchasing that home with no expectation of return. A few pros of the FHA loan program is that you have a low 3.5% down payment. You have lower interest rates than typically like a conventional loan. Gift funds can be used for up to 100% of the down payment amount. Lower credit scores, generally 500s, 550s and above may be able to get approved depending on your circumstances. You can easily refinance with FHA streamlined loans. It has higher debt to income ratios being accepted. They're assumable. So in other words, if someone has an FHA loan on a property, you can actually assume it if that's something that they're looking at doing. It's one of the easiest mortgage products other than VA to qualify for, and sellers can actually pay up to pay some of your buyer closing costs if it's agreed to in negotiation. So it's best to factor in between 2% and 4% for your buyer closing costs. I generally suggest with the families that I work, plan on 3%. that seems to be the most practical. So if you have a $300,000 home, then you need to plan on 3% of that could be your buyer closing cost, or $9,000. Even though buyer closing costs are negotiable when writing the offer, it's important to understand the market conditions and the climate that you're in. If you're in a seller's market, it's probably not going to be as likely or as realistic. So if you want your buyer closing costs covered, in a seller's market, you're probably wanting to find the properties that have been on the market for a long time, relative to the average days that it takes most of the properties to sell, to try to find a better negotiation there. A more balanced or normalized market, maybe sellers will be a little bit more agreeable to it. And in a buyer's market, well, it might just be more of a thing that sellers are trying to do so that you buy their home opposed to somebody else's home. It's important to know about your market conditions and the reality of how buyer closing costs are negotiated. Everything is always negotiable. It's just a matter of how probable and realistic is it for the current market that you're in. Now, FHA also has some pretty cool tools like an FHA 203K loan, or essentially when you hear of like a home renovation loan. So you want to talk to your local loan officer to learn how that works, the different qualifying factors, and how to bring your stuff up to speed on that. Conventional loans. Now, there are different conventional loan programs, and I'll be having my loan officers on here shortly talking about some more different type of low down payment loans. With conventional, there's actually like a 97%, what's called a 97% loan to value mortgage. What that means is it's a 3% down loan. And there's actually 1% down conventional loans depending on different lenders that might be able to assist you with it. Advantages of those type of loan programs is there's no front-end mortgage insurance required like an FHA loan. The mortgage insurance automatically cancels when you reach a loan-to-value ratio of like 78%. So when you're talking about those kind of numbers and percents, you know, you're talking about loan-to-value ratio. Essentially, think of it like this. How much equity do you have in your home? If you have 22% equity of your home above and beyond what you paid for it, then you would have a 78% loan to value ratio. So it's pretty cool to think about it like that. So first-time homebuyer down payment assistance programs are extremely popular, extremely common, and they vary wildly, and I mean wildly. It's going to depend on what city you're located in, what state you're located in, depending on what type of programs that may or may not be offered. Sometimes they'll offer programs for for a period of a few years or 1 year, and they may not offer it again for a little while. So it's important to work with a trusted real estate advisor that can help you, guide you, and introduce you to a great local loan officer to explain all of your loan options that are available to you so that you can make the best decision possible for you and your family. So no money down mortgages with bad credit do exist. Just keep in mind, if you're a higher risk candidate because you have a lower if you have bad credit and you can't come up with a down payment, they're going to be charging you for it. So just keep that in mind and be very, very careful about that. I've put some helpful links in the show more description below. Feel free to click on those, find out about it, talk to a trusted real estate advisor, get introduced to a great local loan officer, and start having these conversations now. You can never start too early when you get ready to buy a house. Ideally, you want to start having these conversations anywhere between 6 months and 12 months in advance of buying a home to start getting up on the process to make you, whenever it comes time to buy your home, you will be ready, and all the fear and anxiety associated with buying a home and are tempered with excitement. It's important to remember fear is only an acronym for false evidence appearing real. The more you know before you go, the better off you're going to be and the more successful you're going to be. Now, it's your turn. Tell us what questions you have about this video. Tell us what you're thinking about with these different no down payment home loans and low down payment options that are available to you. Tell us what's important to you about them and what you're wondering about in the comment section below. Again, the best source of all this information as far as loans are concerned is a local loan officer. Please reach out to one today if you have any questions about any of these points that we brought up. A very educational video, simply giving you some ideas for some questions that you could be asking your local loan officer to figure out what's best for you. I'm going to put my contact information up. Feel free to reach out to me if you need any help finding a top agent where you live, or if you simply want to drop me a line to say hello. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know that's going to be able to help. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you so much for watching today. Enjoy an amazing day.